Hello and welcome to our daily Forex market review. My name is Schimming, and this review is for Tuesday, February 26th. Starting as always with my currency strength index, I want you to immediately notice the continued volatility of the yen here in light blue. Now, knowing that yesterday, if you look at yesterday's review, we know that the yen had experienced some continued strength. As a matter of fact, rose to a level of over 300 on the CCYX. Now today, as it started out from rollover, which is what this chart is showing you, you can see that it traded down to a level of minus 100. And this is significant, and it's very powerful and attractive in the fact that if I was going to do a fib retracement on the levels of the CCYX, that's basically a 38% retracement, which all of us would consider very attractive and healthy for trades. Once it came down to this level, it did find some buying activity, and support did come into the pair, and overall on the day, not straight up, but overall on the day, we have seen the yen rise much higher, which again is a benefit to all of us as traders. Now, during the Asian time frame, we saw it bounce, and then coming into London, largely in fact probably due to the Italian elections, I think there was some uncertainty and maybe some frustration there. We waited till today during the New York time frame, and when the U.S. economic news came out on the housing data, we saw the dollar and the dollar index, look at the dollar in green here, rising slowly but surely with the above average economic data, which was positive for the U.S. equity markets and ultimately positive for the dollar, and I believe helped pull the yen back to a strength move, which took it to the upside. Trades in the trade room today were short in euro yen and pound yen. I believe one trader took a Swiss yen trade. But if you look, you have the yen moving up, you have the dollar moving up. And if you look at every other currency, they're trading down. Look at the euro in red, the Swiss in white. You see the Aussie here in orange, the CAD, even the New Zealand, the pound in pink, even the New Zealand down here in gray. Now let's look at this, and let's go just to the euro yen, because we've been focusing on the euro yen on these sessions. And I do want to say, the CCYX is looking at one of the largest global liquidity pools. The electronic transactions done over 70 banks and brokers globally. So the data inside there is significant. And we also give you direct ECN access to trade in that global liquidity pool. A massive benefit to traders in my system. As far as the plotting goes, and even though I'm a pioneer in bringing not only electronic trading to individual traders over the past 25 years, but also giving direct ECN access to traders over the last 25 years, and now pure price technology, I introduced Forex range bar charting to the Forex industry. My charting software is the most advanced and leading program in the field of pure price technology, something you can have access to. You look at the CCYX, however, and even though it's looking at pure price only, its plotting is done on a time element for this particular view. So there are, and this was a question asked of me, there are actually three different views. One that's plotting every minute, one that's plotting every 5 minutes, and one that's plotting every 15 minutes. Typically for the reviews, I do the 15 or 5-minute view because I want to show a broader view and I want to have the smoothest, cleanest display of the data. We look at the 1 minute, we're seeing everything it's plotting every 60 seconds, constantly updating. And so it's going to be the more detailed view, but also going to be a little bit choppier, a little bit messier in the lines as far as the display quality. But there's a benefit to that, because if I'm going to team, say, the 5 minute and the 1 minute as a trader, the 5 minutes is going to show me what's happening overall, and the 1 minute is going to help me confirm whether it's still happening or not. Becomes a tremendous opportunity to you as a trader to utilize this one tool, this simple overview tool that is going to help you find your focus or the pairs that you should be focusing on. As I always say, which currencies are trending up, which currencies are trending down, and which currencies are not trending at all. That is the basis of utilizing this view. Now, if we take this down to just looking at the euro and the yen on the day, this also becomes a unique view. You can see how the euro was trying to move down, opposing the yen. We have convergence, the yen moving up, the pound or the euro moving down. You come into the later stages today when we are making short trades, it's because the yen started moving up, and as I just showed you, all the currencies were moving down. But since we're talking about the euro yen overall, I want to show you the convergence that they still had. While the yen was moving up, the euro was moving down. But again, this is not to suggest that you can only trade the euro yen. This is to suggest that the yen pairs overall for 2013, for the first 2 months of the year, have been providing by far the better opportunity, the marketplace. Yesterday we saw the euro yen trade with over 650 pips of average of total trading range, which is the most we've seen in months. Probably more like 18 months, I think, since the Aussie pairs were the Swiss pairs were seeing those extreme volatility in the marketplace. So let's go back. Let's look at some screenshots from prior lessons. This is your screen view from my review on February 8th. You can go back and see this is the exact chart that I use. This is a screen capture. This is not something I recreated today. That lesson I was teaching you the difference of a consolidation here, the smaller tighter range here, which is a consolidation in the uptrend, and the transitional period, which is much more substantial in the drawbacks. And even though this was continuing to set higher lows and hadn't broken trend, I told you then, and I will reiterate the fact that the pair was running out of air. Didn't mean it couldn't go any higher. Obviously it had. But the fact is, this was an event signaling that the potential of the end being near. And on this particular day, and that was back in January time frame, we were looking at this. You go into the first few days of February, and I was identifying that we had really gotten to a topping range. As a matter of fact, the trend line which is showing support, for the first time was showing resistance. And that's why the whole reason this red circle is on here saying, alert, alert, this is significant what's happening right here. What was an uptrend line is now proven to be resistance because the pair bounced off of it. You have a triple top, a head and shoulders, a double top, 1, 2, 3 pattern here at the top of it with divergence. That becomes hugely significant. So this topping pattern and the 1, 2, 3 with the divergence, we start to see the support at 124. This is where this lower line here is that 124 line really becomes something that I wanted you to identify back then. And my point was, if 126 and higher is at the upper end of this transitional and 124 and lower is at the lower end of this transitional, which side of that it's on is got to be a basis of concern and should bias you on which way we're going to look at the market. I'm not here to predict and forecast, and I tell you repeatedly, that is not your job. Your job as a trader is to anticipate the possibilities and then to react to the reality. So this wasn't to say that it couldn't go up. This was to say that most likely it was going down, and that's how you should be looking at it, with a bias, and hopefully taking advantage of the short trades that have been provided. This was a significant view and something that you definitely should have considered and heeded. So we go into February 22nd. This is the screenshot from my market review on February 22nd. Again, still showing the trend line, but letting you see more significantly, not only did this trend line become resistance, but I'm now showing you and clearly pointing out that the highs in this consolidative range, this transition, have been getting lower, and the lows have been getting lower. Definitely worth noting. If you didn't believe it when I first showed you, and largely in fact some of you couldn't see that because your time-based chart still did not show the breakdown because of the flaw in which a time-based element charts. The whole benefit of using my pure price technology is it breaks down the rapid price moves, make it more legible, identifiable, and tradable, and it reassembles slower pricing, which again makes it more legible, identifiable, and tradable. The market doesn't move in an orderly fashion, and when you need your charts to be at their best in a time-based world, they're at their worst, and that's where my charting element shines. When you need them, they are there and they're working for you, giving you a clean, clear, noise-free charting display, one that makes it more conducive of better entry and exit decisions because the clarity and the earliness at which we can identify trades. My job is to remove you from the herd and teach you to take advantage of the herd mentality, because ultimately there's still traders going long up in here, and we're looking at the shorting opportunities. There were longs when it came down to 123.50 and had divergence, no question, that was a long opportunity, but our bias has been to the short side, and we knew that once it really could get below 124 and trade down, then those long traders would have to start covering those bigger positions, and that would only add fuel on the fire and help us make more money. This indication right here was to point out when 124 was support back here and was resistance here on the way up, all of a sudden for the first time we had 124 right here at the very far right edge of this chart. You can see where 124 is now resistance. Significant event, and one that should have been recognized by all traders. So let's advance. Let's go a little bit forward, and if we take and go back and look at a chart for today. Now I will start, let's get rid of the CCYX, and let's go to a Euro-Yen view. And again, not to say that you can't trade other pairs. This is really the same situation is happening on all the Yens right now. But look at this view going back to early January, to start of the year. You can see the transitionary period that I had boxed in on that Feb 8 view. Here is that transitional point. And the reason I have this zoomed out to early January is I want you to see why it is finding a home at 119. 119 to 121 is now where it's consolidating. This is no coincidence. This brings it down. We're in that first transitionary period. So as it's pulled down, remember yesterday it traded as high as 125.22. Today it broke 119. So there's traders that seeing that type of pullback saying this is cheap, this has got to be a buy. It doesn't have to be. It's got to go up from here. It doesn't have to do anything. As a matter of fact, from a technical standpoint, you better look out if you're long, because I'm getting ready to take your trade from you and make money on the short, assuming that it can in fact break down. So let's advance this and look at this with a little bit more detail. You can see the 127 up there at the top, and as we bring that forward, you can start to see the divergence from that double top and that 1, 2, 3 pattern. You can also, as I bring it a little bit further forward, you're going to be able to see the divergence on the first major pullback that broke 124 right here. You have this 123.50, 123.40 range. You can see the divergence. You can see the topping pattern. You can see the divergence. A lot of volatility up here. Came back up to 127, failed, came down and broke 123, came down to 123, and this time came lower than this consolidation. Moved back up, found a home just right about 126, slightly above. Traded down again. This is Friday. Friday we saw it trade down. This low point here is 122.25, so it's violated 124. And looking at this consolidated view just going back the last few days, this is from February 5th forward, so for the month of February, can you not see the lower highs and lower lows? The consistency of the lower highs and lower lows starts to become a little bit more obvious when you step back and take a broad look and then advance yourself in and bring yourself to see the greater detail of what's happening. Yesterday then became significant. Remember, the event on February 12th, 2 weeks ago today, we saw a very strong move in the upside of the yen, something that was unusual that we have not seen over the last 6 to 8 months take place in the yen pair, at least not the yen being driven to the upside. And so this is something that all of us needed to identify, and since the 12th we've seen more days of strength than weakness in the yen. So the transitional period, or the tide, is changing in the yen pairs in my opinion, and providing an opportunity for us as traders to take advantage of what we're seeing. Now you look at what happened yesterday. It traded as low as, this comes down to 118.71. The difference between this high and this low move on the day was 651 pips by my spreads. And you can see that it has definitely found some support. It's moved too much. It needs to move back up. We want it to come back into the zone. You can see the zone configuration. Whoops, I didn't mean to jump that over. You can see the zone configuration, and we want it to go back up in this zone. That would be most ideal. Let's see if I can bring this forward a little bit. And that's where we want this thing to go. So a trade back up to say 121, or as long as this is little 121.30 range, I think right here, 121.36, and these are touches at 121, 121.04 right there. We'd like to see this thing stay below 121. But come into my zone. My zone configuration is designed to give you that sweet spot, that ideal range where a pair can move back to. If it's in an uptrend, it has to move down in the uptrend to create a new long entry. If it's in a downtrend, which is setting up here, it needs to rally up in the downtrend, set a lower high to create a good entry. The zone gives you that ideal range, tells me that's moved up enough to be worthy of my consideration and not too much that I have to be afraid of it. So I want it to come into the zone. I want it to get over this 120 mark, hopefully not break over 121. Ultimately, it could come up to the 122 range, 122 right here, and still be acceptable as far as I'm concerned. Maybe even a little bit higher, but ideally it will stay below 121 and not break this level right here. And that puts it right smack dab in the zone, and that's what we'd like to see. That's what I'm anticipating. That's what I'm looking for. If it breaks over 121, we might think that on the short term the downtrend is over. The buyers are going to come in and stage another move to the upside. We'll be looking at the pair long again. You could look at the same pattern on the pound yen, Swiss yen, CAD yen, and the euro yen, but the yen pairs are the ones that you should be focused on right now. They are providing the best opportunity. So our anticipation, we can see both sides, what needs to happen. If we're over 121, we're going to rethink this and look at this maybe with a more of a long situation, at least on the short term. If it can't get over 121, then I know the short opportunity is more than likely available. Trading back down to 119, if it can get below this 119 level, taking out this low on the day and ultimately the trade low yesterday that was just below 119, 118.70 range, then that becomes a significant event. So from 121 back down to 119 already provides an opportunity. But what about when it gets below 119? The 118, 116, 114, 112, all those levels provide more significant support and ultimately resistance than we see at the other levels, or at least in those ranges. Those are worth considering. So there's our anticipation. If we look at the broad market, let me minimize this chart, and you look at all the yen pairs on the day, you can see the pound yen at the bottom right hand corner. You can see the euro yen at the bottom left. I have the Swiss yen up here at the top left, and then I'm bringing the euro dollar on here just to show you the difference between the euro dollar continuing just to move sideways because the dollar is not showing. It has a downward bias. You still have a selling zone. You're still below the pivot, but the dollar's just not moving the way the yen is. The euro yen and this pound yen provided the better opportunities on the day, and the Swiss yen. And that's what I want you to see. Those trades from the zone, these moves that have come into the zone, have provided a great opportunity. I'm telling you, you can learn to anticipate this properly. You can learn to do proper analysis, and you can learn to be more prepared as a trader. You can be a better trader than you are now, regardless what you think you know. The day you think you know it all is the day you should close your account. You should be on a never-ending quest to expand your education and your knowledge so that you can become a better trader over the long haul. And I'm here to say that I'm willing to help you. Send me an email to DerekSchimming@gmail.com. Let us send you the questionnaire. Let us set up a date when we can invite you to spend a week or two with us on our trade room. Experience some live trade sessions with me, making active calls, trade management, experience some of our trade classes so that you can learn more about the markets and how to approach the markets, and do this in conjunction with what you're already doing. I'm not asking you to stop what you're doing. I'm asking you to bring my methods in line with your methods so that you can combine them and become a better trader. I think you'll find that my simplistic approach and my clean, noise-free charts will become a better asset and tool for you to utilize. It makes every technical study, indicator, and oscillator quicker to react, reduces the lag, makes the identifications much clearer, and gives you a leg up on the marketplace and what's happening in general. This is a great opportunity, and I challenge you to find a better, more complete situation than what I'm offering you today. So send me an email to DerekSchimming@gmail.com. It's printed right on this video, and we'll invite you in. If you have questions, post them on the videos. I'll answer them in this lesson, just as I did the question about the plotting of the CCYX. I look forward to additional questions. Click subscribe on our page so you can get our mail outs, and I look forward to seeing you on my trade floor. And as always, you guys and gals, have a great day trading.